All right, welcome back to Bitcoin Capital. Today we're coming to you from the first ever Plan B forum event in San Salvador, El Salvador, the heart of Bitcoin country. We're very lucky to have with us today senior ETF analyst at Bloomberg, Eric Balchunas. Eric, welcome.
Thanks for having me.
Great. All right, my first question is 2024, the big event of the year was the final approval of the much awaited Bitcoin ETFs. How successful were the Bitcoin ETFs?
Yeah, it's hard to overstate how successful they were. I've been covering ETFs for 20 years. This is by far the biggest launch, most impressive. A couple stats I'll throw at you. They took in $37 billion in the first year. Net flows. That's a hard number. That's like the truth, 37 billion. We thought they'd be 10 to 15, and we were optimistic. They doubled that and then some. They have 120 billion in assets. That's as much as gold ETFs have already. We thought it would take 4 years to get to gold. So they're already there. And IBIT in particular is massive. It got to $50 billion in 227 days. The next fastest ETF in history was 1,300 days. So less than a year versus 4 years. It's insane, right? So clearly huge hit. Why was it a hit? Everybody's been waiting for it for 11 years. It's cheap, 20 basis points, some of them even lower. Liquid, and big brand names like BlackRock and Fidelity. So the regular investors of the world are like, after SBF and all that, they got like some legitimacy. And then like now it's safe. Larry Fink says it's okay. It's cheap. It's liquid. It's got BlackRock. I can't get fired. That is a powerful combination for America's advisors. And we're seeing that in the flows.
So if 2024 was the year of the ETF, I think the hope is that 2025, Bitcoins are like just hopeless optimists, right? So 2025, we're hoping for more sovereign adoption of Bitcoin. We're coming to you from El Salvador, which of course was the first country to adopt Bitcoin as its sovereign currency. Maybe some changes, some bumps in the road for that. But what do you see for the US and what do you make of the Trump administration's strategy so far? Because the strategy really looks like a mixed bag. I think from a Bitcoiner's perspective, there's some things that I think are, that we like the end of Choke Point 2.0, repeal of SAB 121. But there's some other kind of head scratching things like
Yeah.
the president and the first lady issuing meme coins.
Yeah.
So what do you make of the strategy so far and where do you see it going?
Yeah. First of all, I generally think Bitcoin was at 25,000 when BlackRock filed for the ETF. I think the ETFs were a big, if not almost all of the push to 70. But then Trump winning pushed it to 100. And now where do you go from here? First of all, I would just say for Bitcoiners, I think sometimes they get a little spoiled. You're up 127% since the ETF launch, and it was up 80% on the anticipation of the launch.
Yeah.
So I would say be happy. That's
Yeah.
like 4 times any other asset in the world. Okay, so you're good. Now, looking forward, I think you have to sort of look at 2 steps forward, 1 step back. Not all the news will be great, but man, imagine if Biden won and you had Gensler, there would be no talk of any of this. So yeah, maybe you get Bitcoin in-kind creation redemptions now.
Yeah.
You get Ether staking. And with that, you'll get a couple crazy meme coins. I think you take the baby with the bathwater. And I think in Trump, it's the same way. I think generally just focus on the baby,
Yeah.
not the bathwater. But Bitcoiners have a habit of just focusing on the negative, I think, sometimes. And I think, generally speaking, you've got the president on your side, you've got a crypto czar, and then go back to ETFs. You got Larry Fink, Fidelity,
Yeah.
Invesco. You've got the biggest Wall Street asset managers out sending their wholesalers out talking about this story. And just relax and be patient. That would be my message.
And you mentioned the in-kind redemptions and subscriptions. I think it's subscriptions and redemptions, right? It's on both sides for the ETFs. Is that what's being considered?
Yeah, in kind just basically means like if I wanted to create new shares of IBIT,
Yeah.
anybody can bring Bitcoin to BlackRock and get shares of IBIT. It's like an exchange.
Yeah.
Before you had to give BlackRock cash.
Yeah.
Why did the SEC do that? They thought they didn't want Bitcoin source that might be like laundered Bitcoin or sketchy, and that's why they wanted cash only. But in kind, I won't go into the wonky details, but when you do in kind, it helps just keep spreads tighter, cheaper,
Yeah.
and percent premiums tighter. It's just a slightly more cost efficient, better deal for the end investor.
So what do you think the impact will be on the market? Do you think that'll drive more liquidity, more inflows
Yeah.
into? Yeah. Yeah.
Yeah, because there'll be more places to get it, more competition. Look, when you have an ETF and it tracks whatever your thing is, you unleash the biggest, richest, smartest market makers.
Yeah.
Because anybody in the market who's bidding up IBIT, right? It's trading on all these exchanges. A market maker is like a dealer, right? It's got to have shares of IBIT if it wants to be in the market. So it has to know how to get IBIT, how to arbitrage it. and it's going to only deal with legitimate actors. It's going to compete the two sources against each other so the costs come down. So when you unleash all of this power of these liquidity providers, it helps. It helps. I was at the SEC to one of their conferences, and I said directly to them about 3 years ago, you guys should use the ETF as a regulatory helper. Because when you unleash all these markets, they're not going to deal with sketchy people,
Yeah.
and they're going to bring the cost down. They're going to do a lot of the cleaning up of the quote Wild West that you want to do. In the end, that's exactly what happened. Now Gensler's taking credit for launching the ETFs. And so that's the benefit. And in kind just helps unleash that a little more.
Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.
Yeah, I wonder if almost if the in-kind part could also be a transition for people doing. I know there's regulatory and mandate restrictions towards funds holding their own Bitcoin, but I think ideally from a Bitcoiner perspective, you'd like everybody holding their own assets with their own keys. And I think the investment kind of thesis from Wall Street is purely digital gold right now. I don't think anyone's considering peer-to-peer electronic cash or censorship resistance or anything like that. So maybe that's a transitionary step into getting people more on board with the Bitcoin kind of ethos.
Yeah, look, the shift from it's a currency to digital gold was interesting. But the more I think about it, the more what is beneficial about Bitcoin as an ETF investment in a portfolio is it's got the store of value properties. It's truly decentralized.
Yeah.
It's scarce, and a lot of people believe in it. It's like gold in that way, but gold doesn't move a lot. Bitcoin's volatile.
Yeah.
To me, it's gold as a teenager. I mean, it's literally 16 years old.
Yeah.
It's got attitude. It's going to steal the car. Highly volatile. Talks back to you. But that makes it hot sauce. And there is a huge market right now for hot sauce in portfolios because all these investors found these Vanguard index funds and they married them. They're like,
Yeah.
I never need to like trade again. I'm just going to marry that Vanguard index fund and wait 30 years. Well, they like that, but they're itchy. And so they have a little bucket for like speculation.
Yeah.
Gold doesn't really fit in that bucket. Bitcoin does. So in my opinion, Bitcoin kind of is a twofer. And that's why I think it's taking off so much in the ETF wrapper.
Do you think there's too much hot sauce for a sovereign balance sheet? Like, what do you make of the idea of this national digital asset stockpile?
Yeah, so I just think long term, it is a store of value. It's going to settle down. All this institutional money is going to settle the volatility down. But I think if the volatility scares a couple people away,
Yeah.
it's also bringing in people. So it's maybe a wash. So I wouldn't look at the volatility as bad. And there's nothing you can do about it. It's volatile. And I do think that is something you have to acknowledge that it trades like a high beta stock. In other words, if the stock market goes down, usually Bitcoin goes down a little more. And I think that's something that was a fear for me in terms of what could cause Bitcoin to go down like 40, 50%.
Yeah.
And I thought, well, if the stock market crashed, but with Trump, he loves having the stocks up
Yeah.
and he loves a good stock market. So I think it's almost like a Trump put now instead of a Fed put in terms of stocks probably going to be okay. That's good for Bitcoin. So I do think the idea of using it as a reserve is smart. And honestly, let's say it goes up 100%. Damn, that's even better than a reserve.
Yeah.
And so
Well, that's what's happened in El Salvador.
that's exactly. So I just think if I'm a corporation or the government, I am having to have a real conversation with myself that this is volatile. It's had 70% drawdowns and stuff. And you have to acknowledge that. So just like a boomer buying the ETF is not putting 100% in, they're putting 1 or 2%. Their nest egg is in S&P 500.
Yeah. Yeah. I mean, that's how you handle volatility is with positioning, right?
Yeah.
As you just make positions smaller.
Yeah. So overall, your whole budget or your whole assets, this isn't going to like totally destroy you if it goes down 50%.
Yeah. All right. I want to shift gears to security tokens because I suspect we might have a slight disagreement here. So we had comments recently from BlackRock, and they're all of a sudden they've switched from being kind of a villain to a hero, right? They're very pro Bitcoin. Larry Fink seems very pro security tokenization. He had comments that he wants to push the SEC to be faster on allowing tokenization for equities and bonds. And you had some comments on that. Could you maybe share what your thoughts are there?
Yeah. So, I mean, look, Larry Fink is the head of the biggest asset manager in the world.
Yeah.
So everything he says has a lot of weight. That said, my thing with tokenization, I think where there's friction, I think tokenization will help. Money market funds are a little painful. Real world assets, private equity, art, I could see that stuff being tokenized because as a real estate investor, it's not easy. But like tokenizing stocks and bonds, it might help BlackRock save a little money in the back office.
Yeah.
But ultimately, for the end investor, I can go on my phone right now,
Yeah.
fire up Schwab, hit IVV,
Yeah.
hit buy, and I own the S&P 500, the world's greatest stock market, in like 3 seconds for no fee and no friction. It's tough to disrupt that. So part of what I've been skeptical about anything coming along trying to disrupt the ETF is how does it make that easier or
Yeah.
cheaper for the end consumer? So the answer is, well, it might save BlackRock a little money.
Yeah.
And
Well, I think
well,
that's what their angle is.
yeah, and maybe, but I don't see a retail investor moving unless you make it worth their while. Now, you come with me and say, here's a token for private equity or I don't know, art,
Mm.
something that I can't really buy, wine, baseball cards, I don't know. I could see like, okay, I could add that
Liquid assets
token
and liquid
into my,
assets.
yeah. So that's my presentation today is to explain to people that ETFs are just as disruptive as Bitcoin.
Yeah.
They are a disruptive power couple. And so I ETFs are so disruptive because they're so good. They're fast, good, and cheap all at once. They're like Amazon. They're very potent. So tokens, I think, have to respect that
Yeah.
as they go in. And I talk to different token people, and some are like tokens are the end game. It's all good. And then others are like, well, we're gonna win some battles, may not win the whole war, but here, it can make sense. I'm kind of middle of the road,
Yeah.
but I'm got my ears open because I run an ETF analyst team, and I don't know if we have to change our name to token analyst. We'll see.
Yeah, but I think there are some major friction points, right? Like if you look at how Bitcoin trades on Bitfinex, for example, it's 24/7, it's 365, it's real-time settlement. And I think traders and portfolio managers, like they would kill to have that, right? If so, for example, we have if Trump wants to sanction Taiwan. I'm based in Taiwan. Anyone listening in the Trump administration, bad idea. Not sanction, sorry, tariff Taiwan. Don't do that. People want to trade TSMC, they can't, right? So they have to trade something else. So typically
Yeah,
what they're doing now is they're selling Bitcoin. But I think if you can have so I look at one of the big opportunities for tokenized public equity as like an ADR or GDR analog,
yeah.
right?
Well, the tricky part to all this is that the ETFs come with all this regulatory safeguards. And I'm not sure how tokens get through that. I mean, that's a big question. The other question is the reason there are regulatory safeguards is that if you're on the blockchain, you're totally decentralized. It's like, well, who do you call if there's a problem?
Yeah.
I think for a mainstream advisor and like somebody who's got a lot of money and worried about losing it, those things matter. The
Yeah.
anti-fragility of having all those back office people, it actually makes the system pretty robust, even if it is a little archaic.
Yeah.
And so when we have these sell-offs, somebody can call the administrator, call the custodian. This checks and balances is actually beneficial. In fact, you can't get an ETF through unless you tell the SEC, we've got a custodian, an administrator.
Yeah.
They need all this. I'm not sure how tokens are going to check that box. So I get it.
I think they won't.
Yeah.
And I mean, is they won't you don't want to do that. We want to streamline the system. And this is my criticism of kind
Yeah,
of like
but then it's like, well,
yeah.
if it part of the reason the Bitcoin ETF was so powerful
Yeah.
is that it did have the SEC stamp of approval.
Yeah.
That is major for the big chunk of middle America advisor types.
Yeah, no, I know that product was successful on a lot of metrics and it made number go up, which is a good thing. Everyone's happy about that. But I do find it slightly disappointing that Wall Street had to have Bitcoin wrapped in a security and completely spoon-fed to them before they could accept it.
Well, I will say this, that if you think about a regular person,
Yeah.
they're not into the mission.
Yeah.
They just want something cool in the portfolio and they want to cure future FOMO. They don't want to kick themselves. It goes to a million.
Yeah.
So they don't want to deal with the wallet. And
Sure.
and I was like reading, somebody was like in the LA fires, somebody lost their phrase.
Yeah.
And I was like, an ETF fixes this. And I got obviously blown up by the Bitcoin people, but it kind of true. Like you outsource this for a purpose. I also don't want to track the 500 stocks in the S&P 500. I'd rather buy SPY and outsource it to State Street. People who best of VCs want, no, they don't want, they want to outsource everything. It's a lazy move,
Yeah.
but that's the whole point.
Sure. Yeah. Well, the other thing I would say too is that you mentioned decentralization. I actually don't think the tokenized securities can be decentralized. I think it needs to trade on a centralized platform like Bitfinex Securities, because you have a regulator. You need to know who your shareholders are. You need to know who the investors are. You need to have a whitelist, right? Because you need to make sure that from our perspective, we need to make sure that there's no American investors on the products.
Yeah.
You need to make sure that it can't go to Iran or wherever. So you need those kind of things. So I wanted to tell you about one issuance that we did and just kind of like get your feedback on that, called the Blockstream mining note. So it raised $50 million over 8 tranches. It was tokenized on the Liquid network. there's a whitelisted ecosystem. Once you're in that whitelisted ecosystem, you can pull your tokens off the platform because you're in the whitelist. You can self-custody them. We can trade them peer to peer, or you can ping them to another exchange for arbitrage, right? And if you're on the list, we had people trade, had an ISIN, so it was a proper security,
Yeah.
and people were trading it in a Telegram chat back and forth. So, what's your,
But
what do you think that
in
has
this
implications?
scenario, you need your own wallet, right?
You need your,
And address.
you need an address, but you can also keep it on the exchange, as you see fit.
So right there, I think you're onto something, and
Yeah.
I see a market growing for people who want to do that. It's look, mutual fund people who are 80 years old, Vanguard's having this problem now. They're trying to move them to get a brokerage account.
Yeah.
Because you used to just buy a Vanguard mutual fund from their website,
Sure.
or you call them back in the day.
Yeah.
So they don't know what a brokerage account is. It's like a 75-year-old.
Yeah.
So there's an interesting thing going on where ETF issuers trying to move people to brokerage accounts so they can use them. Maybe we'll find tokens are trying to move ETF people to get their own addresses. So I'm not saying no, but to do all of this is a big lift. It takes a lot of energy, but at the end of the day, it's going to take someone going to a barbecue and saying, "Oh, you still use an ETF? I was able to do this, this, and that with a token. It's way easier and cheaper." And I think that's where I don't see people. I see maybe the 1 in 100, you sort of like younger person who's like onto this. They might talk about it.
Or do you mean individual investors?
I think individual investors,
Yeah.
because advisors generally they don't lead so much. They want to hear it from their clients. Like, hey, I want an ETF. It's like I want my MTV back in the day.
Yeah.
A lot of stuff that happens usually is driven by the grassroots, and people who were into active mutual funds. It used to be, oh, I'm in the best active mutual fund, 5-star at the barbecue. Then it came in, it's like, oh, I'm actually in the cheaper Vanguard fund. This is saving me so much money. Oh, really? And that's how change happens, in my opinion. It's not like, and so you need those younger people are getting older though, and they're going to get
That's the demographic.
It'll just take a while, and but how much does it take over the existing infrastructure? Remember, ETFs still only have 25% of the assets what mutual funds have.
Yeah.
So ETFs are still in inning 4 of killing those.
Yeah.
And so tokens might be where ETFs were in like 1996, maybe. So I try to acknowledge that it takes 10, 20 years sometimes for this stuff to reach a tipping point.
I think, our kind of bet too is that this is going to happen like in a geographically unbalanced way. And I think that the G7, for a variety of reasons, partly because you've got really, really strong incumbents that have spent, a lot of time and treasure digging very, very deep moats, that they're not keen to have companies like Bitfinex Securities come in and disrupt them, right? Because disruption means streamlining. It means removing a lot of like the capital market ecosystem players. So, kind of my view is I think this can happen in different markets, like in emerging markets, or I think this opportunity is skewed more to mid-sized economies or even small economies like El Salvador than probably the US.
Yeah. And to that point, I agree. And stable coins and Bitcoin makes a lot of sense. And some of these countries, the inflation's so ridiculous that if you actually want to save for your family, you need another option. The US, it's not that bad. I mean, your real return is definitely less than your total return because of inflation, but it's not like doomsday. The other thing is the US has so much of the world's money and the wealth.
Well, that's it. Yeah.
And that's part of the issue is, and that's where I think when I talk about that person who can just go here, people will be like, well, try telling that to somebody in this country.
Yeah.
I'm telling you that
I'm
true.
going to ask you. Yeah.
No, I get that. It's just such a small percentage of the whole enchilada that
Yeah.
I'm like, fine, great. But the person who does this IVV, you add that up, they've got what, 60 trillion, 70 trillion in assets in the US. That is so crazy enormous. The US stock market, I think, is something like 65% of the world.
Yeah.
And we only make up like 5% of the population. The next biggest stock market cap, I think, is Japan at 5%.
Yeah.
And so getting into the US and disrupting those investors, that's where I'm probably a little more skeptical
Yeah.
than you are.
I agree with that
But
100%.
but picking off these countries where it's code red,
Yeah.
I'm with you. And that's almost a noble activity because they need something else.
Yeah. Yeah, I think that's kind of our kind of mission, is that we see this as an opportunity. So if you're, we're registered in 2 jurisdictions that are probably like, not exactly on your radar. We're in El Salvador and we're in the AIFC, which is a financial center in Kazakhstan, right? And so these are 2 places that I think are trying to leverage Bitcoin and Bitcoin-based technology for capital markets to compete asymmetrically, because there's really no chance that El Salvador can close the gap with the US or even maybe, Mexico. It's still a big pull, right? But if you can leverage this technology and provide like a different product, I think there's a chance to compete asymmetrically and attract investors with kind of like an alternative approach
Yeah, I mean, and really,
and issuers.
I got into the ETF industry when it was in 2005, and it was still like the pirate ship.
Yeah.
And it was people like you who turned me on to it, people who with passion, who could communicate a solution to a problem very well. And I remember going to my third ETF event called Inside ETFs, and the guy opened it up, said, "Welcome to the right side of history." And there's this pirate ship kind of vibe here, and I think that's what you need for something to succeed. You see a problem, you have a vision, and then you have passionate people who get together. So you're in good shape. I just think everything takes longer than people think.
Oh, that's so true. Yeah, no, I've been grinding on STO since like 2018.
I mean, I think ETFs got to $1 trillion in like 2013-ish.
Yeah.
They're now at 10. So and so 20 years to get to 1 trillion and then 10 years to get to 10.
Yeah. Yeah.
So
No, it feels like we're in really like kind of uncharted territory now. It seems like everything's up for grabs. Like if the president is issuing meme coins, like anything can really happen.
yeah.
So what are you looking forward to in 2025?
Well, the Trump meme coin and now an ETF is filed to track the Trump meme coin is going to be fascinating because you're the SEC. You're like, well,
So
we're
we
done.
got a security wrapper on a meme coin.
I know. Well, yeah, that's the issue. So that's why XRP and Solana were not allowed to be ETFIs because they're dubbed securities. But this SEC may not think that way. That where it gets weird is Trump issues this meme coin.
Yeah.
And then if you're the SEC, do you deny the ETF tracking it because it's unsafe for retail? Well, then what are you saying about the actual issuance of the meme coin itself? Because that's your boss. That's where it gets a little weird. But overall, there'll be a line drawn somewhere. They're probably going to go. There could be some criteria where these three are in, the rest are out.
Yeah.
Or it could just be Pandora's box is open. We'll see. The good news is a lot of these coins are going to come out. No one's going to care.
Yeah.
Like there is a real investment case for some of the coins, maybe. But then you get down to the fifth, sixth one. Like in the commodity space, gold did well, silver did well,
Sure.
platinum plating did okay, oil did okay. But then they launched like live cattle futures. They launched nickel, aluminum. They're closed. Nobody cares. So there will be a point where even if they're launched, the market won't buy them.
So that's what I was going to ask about the ETFs. Is the Bitcoin ETF was a massive success, and Wall Street got a taste of number goes up. But what's next for them? Like they must be looking for the next products. So what's next? I don't think the Ethereum ETF was nearly as successful as Bitcoin.
10%. I mean, it has 12 billion. It'll be lucky to get 15.
Yeah.
Ethereum, Solana, XRP, the rest are going to fight over 20% of this category.
Oh.
Bitcoin will have 80%, maybe 75% of all the assets. The spot Bitcoin ETFs are the real deal. This is the aircraft carrier moving down the water. The rest are like little flavor of the months, and maybe Ether's like a little bit of a bigger deal. XR, and then you get smaller. And then by the time you get to like Doge and all this stuff, it's just like again, real minor stuff it gets a lot of print and news because it's funny and it's interesting, but asset wise, spot Bitcoin ETFs, just keep the eye on the ball. That's where all the money's going to go.
Yeah. Okay. So there isn't anything big that they can do to follow up on that. So that's kind of what I say. Is that what Larry Fink is thinking? Is like we've done a securitized token with the Bitcoin ETF. Like, is the follow up on that tokenized securities?
That's what he says, but we'll have to see. There's a lot of regulatory things you have to do to get a stock out into the market.
Yeah.
Does all that apply to tokens? Because at some point, you're just going to basically have a token that's the same thing as I don't know. The issue with all this is the amount of regulation in the US is pretty hefty. So by the time a stock gets out, it's been through all this stuff. You saw the Bitcoin ETF prospectus.
Yeah.
It was 150 pages. How does this work with tokens? And if they're not out under the 33 Act or 40 Act, how do they get out legally? This SEC might be more lenient to creating a easier rule. I don't know. Like this is a lot of unknowns here,
Yeah.
but I do know that most people aren't. Again, the big blob of money in the U.S. it is probably going to want some kind of a SEC approval, and that way, when it's approved, it can start to trade on all of the exchanges and be readily available for America. It's sort of like the FDA. You wouldn't want to buy a drug that isn't like, and CVS wouldn't carry something that isn't approved. So you got to get through that.
They just can't, right? They can only invest in things that have been signed off by the regulator.
Yeah. And that's a big challenge. But Larry Fink is like no joke, right? he hires people from the SEC sometimes when they leave. So if anybody can like work this out from not being in the regulatory body, I mean, Larry Fink's a great champion to have.
Okay. Final two questions. I wanted to go back and touch on you on like the ADR and GDR thing, because I think that's one of the big applications for tokenized securities. I'm not sure if we completely rounded that one off. Do you think that tokenized securities could kind of fill that niche, acting as like a DR kind of concept? So in Asia, we have a lot of companies that want access. Okay, you think that
Yeah.
could work?
Yeah, like an ADR. ETFs are kind of ADRs. I mean, there's a Japan ETF. It's kind of like an ADR. Sure. I mean, again, though, ADRs have to go through a process, and then that local market has to go through. It's just a lot of regulatory.
Is it El Salvador could be like Luxembourg? Like Asian countries go to Luxembourg to do a DR issuance. Like what can't they go to Taiwan, but go to El Salvador here and do an issuance?
Yeah. Yeah, it's possible. I mean, ADR is probably a good way to look at it. But the only thing with the tokens, and this is a question you'll have to, if a token comes out on, say, I don't know, a stock in give me a stock.
Apple.
Apple. Token comes out on Apple. And let's just say the token market starts to get hot and the token trades above what Apple should be worth. Who arbitrages that? Are it all market makers who do ETF market making? Do they come in and arb that? Hedge funds?
Yeah, this is my pitch.
So you're kind of recreating ETFs in a way.
Well, this is my pitch to conventional securities exchanges and kind of like smaller regions. You know, there's an exchange in El Salvador, there's exchanges in Mexico. A lot of these exchanges have like very little liquidity. And my kind of pitch to them is that we're not competitive, we're complementary. Is that we trade 24/7. Our investors have a different kind of like investment thesis and time horizon. We have more degens.
Yeah, you do.
They'll pivot up, right? And then you'll have those like natural arbitrage opportunities that should drive liquidity on both. So that's kind of my pitch to like the second, third, fourth tier exchanges around the world.
Yeah. Um, and if you were a arbitrager, there could be more money to be made in these wider spreads. So yeah, look, I'm not saying no. I'm just saying that where ETFs are now took 30 years,
Yeah.
a lot of wins, couple losses, and a lot of time for it to make its way to the barbecue.
Yeah. Yeah. All right. Okay. Last question. I think we kind of touched on this, but what are you looking forward to in 2025? What's your big hopes?
I mean, the altcoin race is certainly one of the top three things. The other thing is ETF share classes being bolted onto mutual funds. That's wonky, and I won't go into detail, but that's interesting. And the third thing might be related to you is putting private assets in ETFs and turning the ETF into a semi-closed-end fund, private credit, private equity. Maybe not 100%, but like, if baby steps.
Yeah.
That would be interesting because private equity and private credit is $14 trillion market, and currently retail can't access it. In a way, we're getting tokenish and trying to get this to the masses.
Yeah.
That's going to be interesting. And there's a couple filings that are with the SEC as well. And we'll see if those get through, how much they can get through. And they involve big private equity companies like Apollo. And so they're directly involved. It should be interesting.
All right. Good stuff. Well, appreciate it, Eric.
Yeah, thank you. It was great. Thank you.
Bitcoin gives you financial freedom if you hold your own keys. Take full control with the new Blockstream Jade Plus, the leading hardware wallet solution for investors seeking secure access to Bitcoin capital markets. Visit store.blockstream.com today to order.